Couple of minutes before we get started. If you can see me okay, hear me all right, put into the chat, let me know. Hey Ferda, how are you doing? Good, good. I guess you can see me okay, can hear me all right. We do have big news ahead for today. Hey Sumit, how are you? Put in the chat, do you know what big news do we have today coming up? Further, today is a more of an education session, so not so much of a live analysis. I'm doing very well, Sumit. I had a quick trade on gold just before this session, but I'm totally neutral. I'm not in any trades at the moment, just waiting to see what's going to happen tonight. Do you know what's going to happen tonight, or do you know what's the big news happening tonight? During this session, we're going through the support and resistance trend lines and channels. Could be very important, or I think it will be very important for tonight, especially for a big news tonight. So watch out for that. Helps with identifying trend, identifying the range of where you could be trading towards. Any other, have you been entering any trades recently? We'll give it a minute or two before we get started. In the US 100 buy. Buying on a US 100, I mean, without looking at the charts, tonight, if we do see a weakening in the dollar index, or if we do see the dollar index weaken, we could actually see the US 100 push towards the upside, but depends on what the news is going to be, depends on that impact on the news, right? Just be very aware. 9:30 GMT plus 8, we do have a very big news to be released on the US front, the US CPI data tonight. What about you, Sumit? Any trades that you're in right now or have been trading recently? Okay. Not yet, waiting for news. Fantastic. That's a very good approach. I do think a lot of traders are keeping neutral at this point because it's a little bit uncertain what could happen with the news. I'm not ruling out a big surprise as well. So, anything could happen at 9:30 later tonight, GMT plus 8. All right, so let's get started. Back to the topic. Welcome again. Thank you for attending the session. Today we're here with Vantage on the support and resistance. This is part 2 of 2 from the series. So I'm sure you've attended part 1. Good information there, but today we're talking about trend lines and the channel, right? Trend lines and channel. So as usual, before we get started, a quick disclaimer. All right, quick disclaimer. The information, context, opinions which are expressed in a presentation and on the following slides are solely those of the presenter, not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. Right? What it means is that because this is teaching you about the trend lines and the channels, what I always suggest to all clients or traders is that when you adopt a new method, or when you learn a new method, before you apply it to your live trades, I always suggest is to, learn it properly, understand it properly, and then after that, test it out, right? Test it out on a demo account first, on a demo trade, on a couple of demo trades. Then from there, you start applying it. When you fully understand how it works and how to apply it properly, then you apply it to your live trades or your live charts. Right? Don't, what you want to avoid is to apply it straight away, throw it into your own analysis right now. And then what could happen is you end up confusing yourself, right? Confusing yourself. And then it affects your overall trading analysis and then possibly into the profitability as well. Okay, so test it out, understand it, know how it works before applying it to your trading strategy. Very important to make sure that it fits with your trading strategy as well. You want to have a trading method or trading methodology that is in confluence with what you are comfortable with. Okay, so like for myself, I'm more of a trend trader. If I come across a method that is more counter trend or super long term, because I'm more short to medium term, if it's a counter trend or it's super long term, then very unlikely that I'll take on such a strategy, just because it's not something that I'll be comfortable with. Okay, so just a quick introduction of the team here. My name is Jinda. I'm one of the prop traders here at the Everest Fortune Group. I have been trading for 10 to 15 years already. I'll be happy to share with you my trading journey. If you have any questions at any point in time regarding the topics that we're getting through, please feel free to put it into the chat. Let me know. I'll be happy to address your questions as they come up. Right? So don't wait till the end and then ask the questions, because what could happen is you might be lost. You might be lost right at the start. So we want to make sure that we get you on the same page right through the whole session. Okay, a lot of things to get through today. Firstly, what are trend lines, right? How do you use trend lines? Let me do this. So what are trend lines? How do you use trend lines effectively? What time frame can you use trend lines? And then how do you use channels, and putting all of them into a strategy? Okay, so quite a bit to get through. Can be relatively can be complicated if you allow it to be, but I think it's relatively straightforward. Main thing is you notice that trend lines and channels essentially gives you a visual of, so trend lines are basically, you see how price bounces off a trend line to the top, or channel is where you see price bounce in this direction, right? And you'll see that it gives you a good directional visual of the directional bias of price movement, right? So basically, as the name says, trend lines tells you what trend is, and it gives you a good view of which direction price is moving towards. So jumping straight into it, right? What are trend lines and how do you draw trend lines? Bear in mind, right, when you're drawing trend lines, especially valid ascending trend lines, it has to be, where ascending trend lines should be from the bottom, right, not the top. Okay, so what I mean by bottom is that it needs to be below price. It needs to be supporting price, upward trend line or ascending trend line. It needs to be supporting price towards the upside. Okay, so it needs to be at the bottom. You can see it moving right at the bottom there. It should have at least 3 significant touches. What do I mean by significant touches? is where you see it hit and bounce strongly, a bit like a V shape, right? Hit and bounce strongly, hit and bounce strongly. Then you would have a trend line towards the upside, right? What you want to try and avoid is where you have price doing that, bouncing across, not doing too much, bouncing across, not doing too much, bouncing across. And then if you try to draw a trend line there, it will still look like an upward trend line, but it's not going to be a strong trend line, and it's not going to be, in the theoretical form, not a valid trend line, because you're not seeing it as a significant touch, right? It's just bouncing along that level. Could even be more likely to be a horizontal support level rather than a trend line. All right, the two touches tend to be more coincidental, which is why we go for at least three. Right, so quite commonly, if you Google online, if you read some older books, what they will tell you is, oh, to draw a straight line to horizontal or in a diagonal, upward or downward, all you need to do is find 2 points, right? All you need to do is find 2 points and you'd have a trend line towards the upside. That can work, right? Things to consider is how far apart are these 2 points, right? How far apart are the 2 points? If it's very far apart, maybe more valid, but if it's very near, maybe it could be what we say here, coincidental, right? Coincidental, not very strong. So that's why, we introduce the idea that maybe you should have at least 3, just so that you actually have a good spread, right? What I mean by spread is a good distance, possibly a good distance between the significant touches to give you a stronger view of the trend line. Hey, Trung, how are you doing? Okay, so in this case, if you see prices moving this way, then you'd have that 1, 2, 3. Hey, if you have 4, even better. And then you'd have that diagonal line towards upside. That's your ascending trend line. Okay, so like, remember when I said the distance apart, the distance between the significant touches. So what if you come across a situation like that, right? What if you come across a situation like that where you do have a good distance apart from the significant touches? This will be, or is still considered as a valid trend line, right? It's still considered as a valid ascending trend line, because you can see here, price came down and bounced back up. Significant touch, right? Price came down and bounced back up. Price came down and bounced strongly up again. So significant touches, 1, 2, and 3. We've got that big upward move in terms of the trend line. What you want to try and avoid is to have too many trend lines, right? What I mean by too many trend lines is, for example, and this is a common mistake that I see a lot of newer traders do, is when they have a trend line like that, then you do another one here. You do one, I'll try to draw a straight line this way, right? You do another one this way, and then they do one more this way, and just put lines everywhere. You end up getting a bit more confused, right? And you notice here is that as much as it bounces off, this area is not considered a significant touch. It does move up, but it wouldn't be considered a big, strong, significant touch, right? You want to look for the big V shapes towards the upside. Make sense so far for everyone? Let me know, put into the chat, let me know. Okay, good. Now, on the additional example is when you see a trend line, right? It doesn't always have to be 3, right? It doesn't always have to be 3. In this case, you can see as well, as much as we highlighted 3, you do have another one here. So that's your 4th one there. And then you can see it doesn't always have to be, exactly touching that line. You can have it break a little bit. You want to just try and find that fit. Okay, so for me, you just have to be consistent towards how you draw your trend line. there are always questions of whether we draw it to the body, right, or to the wick, right? So you can see here at this point is to the body, at this point is also to the body. If you drew it to the wick, well, then it might not touch this point, right? So it might not touch this point. So just be consistent whether you're drawing it to the body or to the wick. You don't want some touching the body and some touching the wick. Makes sense so far? Good stuff. So that's the ascending trend line where you have the line below price, supporting price to move towards the upside, right? Below price, supporting price to move towards upside. On the other hand, when we look at descending trend lines, as the name says, descending means it's going towards the downside. So it needs to be above price, right? On top of price, not below. It acts as a bit of a diagonal, downward diagonal resistance level, right? It's a bit of a resistance level. Again, very similar or exactly the same, just inverse. 3 significant touches, 2 touches is considered as coincidental. Very important to consider trend lines as a diagonal resistance level, because once it comes close, right, remember, you don't sit there thinking that you expect price to break a resistance or to break a support level. Okay, if it could break, don't get me wrong, it could break, but we're not going to sit there thinking that it's going to break. Okay, so you would have 1 point here, price comes down, pushes back up. You have second point here, price comes down. At this point, as it comes up, you're not going to be thinking that it's going to break through, right? You're going to see it and you're going to realize that, okay, it's near a resistance level. Most likely it's going to reject that level. Most likely it's going to reject that level and turn towards the downside. Okay, so now you would have 1, 2, 3 points of touches and a descending trend line. Okay. Again, how to draw this? You see point 1, 2, 3, right? So how I look at this is, if I've got 3 points here, I would have drawn this descending trend line towards the downside already, which would give me this as a trade idea, right? This as a trade idea, because this is pushing towards the downside. We know that it's a bit of a resistance, acting as a bit of a resistance. So when price comes up and hits this level, I'm not expecting it to push towards the upside, right? In fact, I'm expecting it to turn down, and it did. Once it goes back up, test that level, I'm looking for it to turn back down and then to push down again. Okay. Drawing the DX1 highest time frame is not easy to set up there, but I draw it to see as the upward trend line. But I should find near-term support around 99, right? Okay, let me just click on this and see what I can do. Okay, I'll drag this across. Okay, so this is a link that Trung has just shared. Okay, so main thing here I would say is that I wouldn't consider this as a valid trend line, because it's cutting across or cutting through a lot of the different price, or cutting through the candles. What I would want to see is that line, this green line below this point, pushing below the candle, not through the candle, pushing towards the upside. Okay, and I can't figure this, but it looks like it's on a super long time frame. So when it's on a super long time frame, things to think about is that as much as you could draw trend lines in all different time frames, remember, based on your own style of trading, are you a long-term, are you a short-term, medium-term kind of trader? Because you don't want to be drawing trend lines on a super long term and then you're going to have a I would say expectation, for example, that price could drop significantly, but you're not going to be trading in that fashion, right? So I would say draw your trend lines based on the time frame that you're trading on. Okay, so if I'm looking at an H4 trade, I'll draw an H4. If I'm looking at H1, I'll draw an H1. Any lower than H1, maybe M15, but any lower than that, I wouldn't do too much trend analysis because it does have very choppy price action. All right. Hey, Jamilu, how are you doing? Good to see you here. So I hope I answer your question there, Chung. In terms of drawing the trend line on the DXY, make sure that you keep price below because it's an upward trend, make sure you keep price below the candle, right? And then I think, you identify that support should be below 99. 99 is a fair way away. So I think that, adjust it, look at it at a different time frame might give you a better view. All right. If time permits, I'll jump to the DXY and we could do an example, a live example of a trend line there. So again, another example of drawing just for not much for trading. Okay, good. Again, remember, Trung just said, just keep for references, not much for trading when it's very long picture. Good point of reference. But the thing about, you all know I'm more of a fundamental. I do take on fundamentals a lot more. So the thing about drawing too long a picture, if it makes sense, too long a picture, is that a lot of things has changed between way back and now, right? In terms of economics, in terms of economic situations, data, that the overall global economy as well. So it could signal that support is a lot lower, but things could have changed. We could be forming new supports as well. All right. So because of that, I would also keep the trend lines a little bit more relevant to the current scenario or the current price movements or price action. Again, another example here, drawing trend lines towards the downside. You can see test this kind, you can see a reaction here. So that I would say this whole area is one, and then another one here, and then another one here. Okay, so I hope it's quite straightforward that you'd see how to do downward trend lines. And in fact, as an example, we were just talking about, if I cleared out all this, all right, and you did a downward, for example, if you did a downward trend line in this case, this way, all right, I'm trying my best to draw a straight line, right? It does still show you that downward move, right? You could still identify, significant touches at this point, but it wouldn't be considered as valid because we do see, this bouncing off this level. So price is above the trend line. We do see price breaking through that trend line, not the strongest or not the valid descending trend line, but it will still give you the same picture. So remember the rules, keep it for the downward ones, downward channel or downward trend lines, make sure that price is below that trend line. And for the upward trend line, make sure that price is, oops, no, not that one. And for the upward trend line, make sure that price is above that trend line. Alrighty. Again, turning points, right? Look for those big turning points, the V shapes or inverted Vs, to identify as where to draw your trend line. Okay, so again, an example here is that if I wanted to take in this point right at the top, right, taking this point right at the top, imagine now if I'm drawing a trend line, I would not be able to identify a point, or if I did one and I tried to capture this points, I'm trying to see if I can draw a straight line. Let me see. Nope. Nope. Okay. Well, you won't be able to capture the main points there. Okay. So keep it valid, keep it within the near term, you'll be able to identify those points. Do you guys soon hold some session about divergence? Realize professional great traders are very flexible in timing when the trend line is no longer valid or need to modify when divergence comes. This is still a bit advanced level for me. I'm pretty sure there was, from memory, I think there was a session on divergence being held not too long ago. But what I'll do is I'll pass on this feedback. I'm sure we can schedule a divergence session again. All right. Divergence is important to identify. It does help with, I like the word that you say there, very flexible in timing. A lot of times traders take on one view and they go, hey, I'm looking at buying the dollar, and they don't take on the idea that things can change. Instead of buying, you could be switching to selling the dollar. So take on a bit of more of a flexible approach, especially when situations change, especially during changes in economic data and those sorts. How much ascending angle must be considered as a trend line? No angle. I wouldn't be trying to measure the angle or the degrees of how much the line is pointing up or downwards. Main thing is to identify at least 3 touch points, right? To identify at least 3 touch points. Okay, so don't because it's not possible to really measure the angle, so don't stress too much about the angle of descent or angle of ascent. All right, so you see here that as we had those examples, price pushing downwards, that trend line towards the downside, you see here that it had a break before turning back down, right? A break before turning back down. Okay, so this is going to save you, right? As much as we're going to see this happen, looks like a break, but then it tests. You see here, I couldn't zoom in, but if it tests and then turn back down, tried to break up and then turn back down. So there's a bit of a false break. And then you see the reaction of the fourth touch, it bounces back down towards the downside, being resisted by that trend line. Okay. So drawing trend lines, would you consider this as a valid trend line? Let me ask you this question. Would you consider this as a valid trend line? Put it into the chat. Let me know. No, Jamilu says no. Why not? Why is this not considered a valid trend line? Let's say not valid. But why not? Are you typing? Correct. Okay, for downward, it's not safer. It's more of the rule. So it's not just safer, but it's more of the rule that it does need to be downward, needs to be on above price, acting as a resistance line. Okay, so this is really testing my mouse skill, but a more valid trend line would be something like that, right? With the line above price acting as a resistance to the price movement. See, every time it touches, it turns down, it touches, it turns down, or comes close, it turns down, and then over and over again, forming that resistance to push price lower. Okay, so very good, all of you. Not a valid trend line on this one here, because we want it to be above of price, not below price, because it's descending. Now, coming down to coming down to drawing of channels. If you notice here, channels very simply could look like two trend lines, right? A higher trend line and a lower trend line. But bear in mind, channels require at least 4 significant touches. 4 significant touches, 2 above and 2 below. So 2 above, 1 and 2, and 2 below, 1 and 2. Okay, for it to be considered a valid channel. But it's not going to be easy to identify 2 touches so close together or consecutively. Okay, so it does not have to be in a consecutive order in a picture like that, right? What you could actually see is that it could look like that. So you see one here, it came down, bounced back up, had a bit of a break, and then a big bounce and bounce back up again. So it could be a bit more spread out. You could have more distance between the touch points for that 1, 2, 3, 4 touches for a downward channel, right? For a downward channel. A better example in this case would be an upward channel where you see it touches this point, start of that channel, right? You see price pushing higher. The second one there, you see that this one fails to touch the channel. The next one does. Again, this one fails to touch the channel, and the next one does. So it doesn't always have to go touch, 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 touch. Okay, it can miss a little bit, but main thing is that you're looking at 4 touches, top and bottom. You could have some price action missing the top of the channel, right? Because we're looking at, it forming both a support and resistance level. Doesn't always have to touch. You can come close. My tagline is close enough is good enough. Could come close before turning back down. Obviously, you're more likely to see a stronger reaction if price goes up to test this level and turn down, right? Test this level, reject, and turn down. You're going to see a bigger reaction compared to if it misses and then it retraces, you can see a small move back down again. Okay, so that's drawing the channels, both a descending channel. You're looking for the 4 touches pushing lower, right? And remember here, this is a high, this is a lower high. All right, this is a low and this is a lower low. Right, when you have consecutive lower lows, and lower highs, that's going to give you that direction of a downtrend. And very similarly, low and a higher low, high and a higher high. That's going to give you the indication of an upward move. Make sense so far? All good? Fantastic. Good stuff. Okay. So when we're looking at, well, I would say, and this is applying it as a possible trade idea, a possible trade setup, is playing the continuation. What do you mean by continuation? It's continuation of the channel, continuation of the trend. Okay. A few things to take note of. And hey, if you can take a picture of this, don't write it down because it's going to take too long. But take a picture of this, a snapshot of this, as a bit of a rule to help you with playing the bounce or playing the reversal. Okay, you don't have to always answer all of it because today we are talking about trend lines and the channels. So if you're not used to using an Ichimoku, you don't have to. But things like, is price respecting any trend line? Right? Is it respecting any trend line? Is there any key horizontal or resistance levels available nearby? Right? And then after that, where's the next level it could get to? Right? And again, Fibonacci's, if you're familiar with that, you can also add that in. How I like that is sometimes I'll see a resistance level, and then I'll see a trend line pushing. So you see price moving this way, right? Pushing higher. What I'll be looking for is if price breaks above this level to continue along that trend line, it'd be fantastic. Or alternatively, if it gets resisted and it breaks that trend line, then we could see a confluence of ideas where it got resisted by a horizontal level and also breaks a diagonal support level. You could see a big drop towards the downside. All right, so that's why I highlighted the main thing here, trend line and that horizontal levels. This is a method that I do deploy very regularly on my own trades as well. Okay. So just to give you an idea of how it looks like, you could be looking at that channel, and then we have a bit of a video here, right? We have identified the channel. You see price bouncing off and trading higher. Again, here we go. 1, 2, 3, 4 points. It tests this level and bounces off, right? Test this level and bounces higher. Okay, any questions so far on this quick video? Upward channel, price bounced from this. Can I draw on this? Yeah, price bounced from this level and then pushed towards upside. Okay. I love looking at this video, so I'm just gonna let it play for a while. Just to show you how price respects that channel, bouncing off that channel towards the upside. It doesn't come up to the upper channel, but if you did get into that trade, it would be a very good risk to reward level towards upside. Okay. And on the flip side, if it trades lower, right, on a downward channel, if it trades lower, you see here that we do have our downward channel with the 4 points. Oops, why didn't you play again? Our downward channel to 4 points. It got resisted here and pushed down, right? And in this case, you can see that it respected that channel very well, right? I can't make it play again. It respected that channel very well. Take that away so it's easier to see. Where price hits, every time it hits the top of the channel, it comes back down, hits the top of the channel, comes back down, and gets supported. So can you or would you deploy this as a possible trading method? It can work quite well, especially if you have your channels drawn properly, right? Respecting the rules. But one thing I would highlight is that, try to ensure that your channels are not too wide apart, right? If it's too wide apart, then it's going to make it very hard for price to reach the next channel. I know the question is going to come in where is that how far apart should it be? There's no fixed numbers, but I think that if you keep to the rules of identifying the 4 significant touch points, that's going to be a very good guide to how far apart the channel should be. Okay. So the next thing is playing the breakout. Playing the breakout is when price breaks out of the channel. Right? Is when price breaks out of the channel. Is it going to, it could give you a breakout potential. It could give you a breakout potential where you could see price shoot up strongly or shoot down strongly. Okay. So again, very similar to it keeping within the channel. What you want to look for is, again, if you're familiar with Ichimoku, you could do that. Look at the trend line, horizontal levels. Could it break out? Where can it get to? So you can see here, right? Playing the breakout. If it breaks out of that resistance level, pushing towards the next resistance, right? Breaking off that resistance level towards the next resistance. And this is just looking at the horizontal, looking at just the horizontal trend, horizontal resistance level together with Ichimoku. But what if we consider it together with a channel, right? Again, you can see here 1.2, 2, and we got another 3 points here. So we've fixed the rule, or we've met the rule of 4 significant touch points. And then you see here price coming down towards a horizontal support level as well, right? I like this kind of setup. It's got a confluence of ideas where it's breaking. You can see again, a lot of ideas here, support level, and it's breaking that support level. You can see it coming, breaking that trend line, coming towards the support with that downward channel as well. Now, let me ask you that question. What do you think is going to happen next? What do you think is going to happen next? From this point here. Do you think it's going to break that horizontal support level? Do you think it's going to bounce off that level? Okay, I'll show you here. You see that it comes down, breaks that trend line. Good job, Jamilu. And it does bounce off, right? It does bounce. So it adds on to that confluence of ideas where you're looking for it to, if it breaks that trend line, it meets a horizontal support. Imagine that if you anticipated it's going to, enter there and expect it to trade all the way down. This support level here is going to act as another level, right? It's a small bounce. What I would sometimes call it as a hesitation level, right? Overall, it still could trade lower, but we know that it's going to come towards this point and bounce a little bit, hesitate at the level because it is at a horizontal support. Okay, very good. Again, another example, playing the breakout, right? As it breaks out of that upward channel. Again, 1 point, 2 points here. Oops. 1 point here, 2 points here. So we met our 4 points for the upward channel. See price break the upward channel, breaking that 27.2 fib level as well, looking to push towards the downside. Okay, we have a video here. So it comes down. Oops. It comes down, fails to break, comes down, tests the horizontal support level, that fib level there before bouncing back up again. It does get there. It does get there. I'll scroll back again. If you did enter thinking that it's going to come down towards this point, it could be a good trade, but wouldn't fit very well because your stop loss would have to be, back above that channel or above that 100% level, fib level. Okay, so you could see it come down, test, and bounce back up again. Okay, so playing the breakout, you do have to be extra careful when you're looking at a breakout, because once price breaks, and we all know this, you've seen it happen so many times already, once price breaks a level, very often it's going to retrace quickly. It's going to retest the level before possibly continuing towards the downside or the upside. Okay, so you can see here again, another example, trading the breakout, big downward trend line. Okay, downward trend line providing that resistance. I love this kind of trades, right? Downward trend line providing that resistance. You would also identify this as a bit of a support turned resistance level, right? So I've combined both trend line and support resistance levels once price breaks out of that trend line. Okay, I can tell you that during this period here, I'll be thinking of not selling, buying, right? Of buying, because it's breaking that trend line, is breaking that horizontal level. And once it breaks out, then I'll be looking to buy, right? And you say, okay, I'm looking to buy as it breaks that level. Stop loss below the support. Always remember, stop loss is below the support. Take profit towards that fib level or towards the recent swing high level. Okay, so this is a perfect setup. I love this kind of trades, this kind of setups. If it breaks several levels, right? Because breaking one level, great, might shoot up. Breaking two levels, going to see more momentum or more strength, because it took that much strength to push and break that level. We're possibly going to see more strength continuing towards the upside. Is this your plan for buy setup on following day after breakout session? Sorry, Trong, what do you mean by that? Is this your plan for buy setup on following day after breakout? Typically, I will be looking at trades for myself. I look at trend on the H4, and then I look at trades on the H1. So, I'll be looking at this kind of trades on the H1 kind of time frame, not so much on the daily. So, just needs to break, then I'll be in a trade. So wouldn't be following day, it would be as it happens. Okay, I hope I answered your question there, Trung. And then one more, the breakout, well, the continuation of that breakout. So we saw this pushing, we anticipate this to push towards the take profit. And what happens is it pushes to the take profit, good trade, and beyond, right? And beyond. Now, let me ask you the question. Now that it's got to that point, what would you be looking at next? What could you do next? It's a bit of a trick question. Well, what could you do next? Right, we had this, I'll give you a hint. We had this trend line towards the downside. It's broken the trend line up. What could happen? What could we do next? Okay, you can see here that price. Can't draw a straight line. Okay, bit of a trend towards upside. What you notice here is that it only tested twice. It came very close one time here, but only tested twice. Not a very strong trend line towards upside, but it gives you that upward move. Okay. If I did a trend line, then you could possibly even see that push higher. Sorry, it's terrible to try and draw with a mouse. Okay. Just observe the upcoming resistance test. Yeah, and you can also, have that. Let me take that away. This one right across would be a resistance level. So you're combining both, again, horizontal and diagonal levels, looking for price to go up, test this level with that trend line. You can see it break back down again. Again, resisted by a horizontal level, breaking through a diagonal level, we could see price come significantly back down. Make sense so far? All good? Any questions at this point? If you have any, would like to find out more, do remember to jump onto the various social media platforms. Fantastic. Thanks for that, Sumit. What I'll do now as well is I will jump onto TradingView just to, I'll do one or two trend lines. I think Trung asked about the dollar index, so we'll do a quick one on that. Okay, so we'll look at where's my layout? Okay. So okay, this is what I'll clear this out now. You see here, we can do it on an H4 time frame. Well, we could. Not the best. Let me just test this out. Okay, that's only 2 points, so it's not great. We did have this with 3, very close to 3 points. So you can see that. Can it stretch across? Nope. Okay, so you can see here with that downward push, failed to break above, failed to break above, failed to break above, failed, and then when it finally broke up, you can see that price push highly towards the upside and also formed a little bit of a support level in combination with that horizontal support at 130. Okay, oh, this is the US yen. Sorry, I thought this was dollar index. All right, so that's a example of a trend line towards the downside. And then dollar index. Let's look at an H1 time frame. Nope, nothing there. Daily. Okay, so this is what an example we were talking about just then. If you did draw this, right, not a great one, only 2 points, and this goes way back. Not a great one. I would say that a more valid view, this is on the daily time frame, is if you drew it down this way. Again, only 2 points, but providing you that horizontal, that diagonal resistance level towards the downside. Okay, H4, zooming out, could see something there. All right, so imagine if you didn't realize USDJ had a similar structure. Yeah, it does. It does. US yen is very similar in correlation to the dollar index. So look at this. All right, we have this point here. We have this point here, and then we have this point here. Okay, so 3 points forming that diagonal downward trend line. And you can see price came up, tested. So you've got 3 already. You would have drawn, if I drew it more accurately, it'd be about that point, touching all 3 points. Okay, 1, 2, 3. And then that was in Feb, 7th of Feb, you have drawn that trend line, goes through over the next couple of days. On the 13th, again, gets resisted by that trend line to trade lower, right? So very commonly, as you see price on the 10th of Feb push so strongly towards upside, you would be anticipating. Looks like it's going to push all the way up. It's at that 103.80 level. It's going to break higher. You're anticipating that resistance level of 104 is going to break. What you don't notice is that it's a confluence of a resistance area and a downward trend line providing that resistance, and then you see price reject to turn down. Okay, so this is a very good example here. I'm quite happy I saw this of how that trend line works. One more I think was on the Aussie, where on the H1 time frame, where was it? I was drawing it the other day. Can't see it now. Okay, so an example of how to do a channel. I don't think this would be a great one. A channel towards upside. Okay, so you can see about there. Not a great example at this point. 1 touch, 2 touch, 1 touch, 2 touch. Right, so you see price pushing along that area. Where was it? I found something before. Euro dollar, was it? Nope, euro dollar has that push. Nope, not at all. Not this H4 time frame. No, not this either. Okay. So anyway, I can't seem to find an example on a channel for now. But if you can draw a diagonal trend line towards upside and towards the downside, I'm pretty sure you wouldn't have any issues with identifying a channel either. All right. So at this point, any further questions? And I also like to find out, did you find the session useful, interesting, beneficial? I look forward to your comments and feedback, if any. Do remember tonight we do have big news ahead with the US CPI data to be released. Thank you, Sumit. You're most welcome. With that said, do trade well, trade safe, and take care now. Bye-bye.